Hello, everybody, and welcome to the Open Crime Market Commentary for the week of September 9th. My name is Toby Gennaro from Trade with Precision, and we'll just be taking a look at what's happening in the markets this week. Okay, so let's jump in here and take a look at the S&P 500 and see what things look like this week. Here we're looking at the monthly chart, and you can see we're still on this new candle here for September. We don't have a lower low in place with the break of the previous month's low, so we still have a higher high and a higher low in place for last month, and so we just got a couple of days in here, a week or so on the first candle. We don't have a lot of overextension of the moving average, but we do have a series of months here on a run up. We're on month 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, almost month 11 on this run, so we're due for a pullback on the monthly chart, and that 1528 level more than likely looks to be the place, pulling back right into the moving averages. Moving down to the weekly chart, which is a little bit more pertinent for what we're trying to accomplish this week. Let me just blow this up for you real quick. And so we're looking at this candle right here, a decent bullish candle right there in the buy zone. As you recall, a couple of weeks ago we had another even a better bullish candle in the buy zone, and we got a break of the high, and then we got the news out on Syria and what was going on there, and then we got a break of the low of that candle, which obviously invalidated that trade. So here we're still back in the buy zone. We're getting basically a 3 or 4 candle consolidation in the buy zone, which is good. So last week what we're looking for is a break of the high this week, and the high of last week was 1664. If we can get a break of the high of that level, that would be very good. I'd also more than likely be looking for a break of the previous week's high at 1667.50. So if we can get a break of the high of this grouping of 3 candles right here, then more than likely we'd be looking for potentially another move back higher. And so that looks good on the daily chart or on the weekly chart for this week. And then looking at the daily chart, you can see we have just a series of higher highs and higher lows. The moving averages haven't gotten back into alignment yet, so we have to go down on some of the charts, on some of the time frames to find that. And as we're looking here at the 480 chart, you can see that series of higher highs and higher lows a little bit better. You can see this level coming in right around here at 1663. Got a nice rejection candle right there. A couple of moving averages starting to get back into alignment, and it looks like we're going to be moving higher to potentially break that level up around 1663. As we go down on the time frames, in order to find some of our trade setups, we need to be looking at least 3 moving averages in alignment, fanning up, higher highs, higher lows. And so we don't get that until we look at the 240 chart and lower, and then looking for some of those pullbacks, trade the market back up into that 1664 level. We can get a break of that. More than likely we'll get a break of that 1667 level, and then we might be off for a little longer run. So for this week, these are some of the time frames I'd be looking at. Also, you want to keep an eye out on the news. This market's going to be very headline driven, probably for the foreseeable future, with all the news coming out of the Middle East and Syria, and what action is going to be taken by the U.S. or the United Nations based on that. And so I believe the President of the United States has a State of the Union address coming out this week on Tuesday evening. So that'll be a market mover as well. And then you'll be anticipating the vote in Congress on what the resolution of that issue is going to be with Syria. So anytime you have congressmen coming out, during the week on the news, making statements about the Middle East, we're going to have a lot of market volatility. And so for right now, I'm just looking for good intraday trades that I can take. I'm not looking to hold any trades overnight, or I'm not really looking for swing trades. So I'm just looking for some of the shorter term stuff that's available to me on some of these other time frames. And that's been working out fairly well just because of all the news coming out, and you just don't have any control over that news. So as always, we don't want to be trading ahead of news, trying to guess what that information is going to be. We always want to be looking to take advantage of the market's reaction to the news. So that's what things look like for the S&P this week. And taking a look then at the small cap stocks on the Russell contract here on the monthly chart, really pretty much the same thing that we had on the ES contract. Still looking for that pullback, quite a long run on the monthly contract, but the more relevant for the week is going to be on the weekly chart, looking at another one of those bullish candles, very similar to the ES. And the same thing happened with this 3 candle consolidation. Had a nice candle set up there. The news on Syria, break of the high, break of the low, and now we have a new setup candle for last week, and the break at the high of that level is coming in right around 1034.40. So if we can get a break at the high of that candle, then the next level there would be right around 1043.60. And so really, if we can get a break of this grouping of 3 candles right here, that would be what I'm looking for in order to get another move higher for any duration. Then we'll also need some good news out of the U.S. regarding any action related to the Middle East as well. This market's going to be very headline driven here. And then looking at the daily chart, we can see that level right around 1035 coming into play. So when we look at the level here on the weekly chart, it's right at that level, right around 1035. So you can see that's going to be a significant level. If we can break that, then we can probably certainly get a move higher. Moving down to the 480, it doesn't really tell us a whole lot new there. The 240 chart, once again, these are going to be where you have your moving averages in alignment, and so you can be looking for some of those trend flow trade setups, those pullbacks into the moving averages and some of those flat levels then going long. And so we've got some wild swings in price action with some of these candles. So you want to be cautious this week. I mean, anytime you have, again, you're going to have a lot of folks, congressmen coming out in the news, making statements, and it's very easy to get stopped out when those things happen and when you have a very heavy news headline-driven market. So really time to be cautious here, but want to be aware of what's happening on the weekly chart in case we get some good news on any resolution to the Middle East. If there's no serious strike, then more than likely the market's going to rally. And if there is going to be some kind of a military action against Syria, then you can probably see the markets moving down. So it's really going to be driven on that news coming out this week. And taking a look at the final asset class here, looking at the pound dollar and looking at the monthly chart here, we can see this range we've been in for the past 6 months, down from a low of 148 to the high of this 157. I believe it's 157. 157.50 was the high of that level. We're getting up pretty close to that, but as you'll notice, we have a nice bottoming structure here. Another retest of that 148 level, get some nice solid divergence on the weekly chart. We talked about this last week, and so we've been getting this move up here, higher highs, higher lows, and this next level here is going to be 157.50. So if we can get a break of that level, more than likely we might have some more upside here, but looking for some trades right back up into that 157.50 level. And as you can see on the daily chart, moving averages getting back into alignment, higher highs, higher lows throughout these series of candles, and looking to push back up into that level right currently around 157.2, and then the swing high there at 157.5. Things are looking equally as good here on the 480 chart. Moving averages in alignment look to be pushing higher, and then you can see it again on the 240. All the moving averages fanning out in alignment, and you're getting some of these nice setup candles back here in the buy zone. Things are getting a little bit choppy on some of these other time frames as you go lower below the 60-minute chart. So be looking to stay higher, at least above the 120-minute chart, and then focusing on those candle patterns all the way up to the daily chart, where you have some nice small candles that are just continuing to grind higher on this foreign currency pairing. So things looking overall relatively bullish, at least back up into this level. If you get a break of that level, then we could look and anticipate a little larger move based on this bottoming structure right here. So things looking pretty good so far on the pound dollar. I'd be looking to track that one and looking for the various setups for trend flow setups, as well as flat level breaks going in the direction of some of these lower time frame trends. So there's the outlook for the week. I'd like to thank you all for watching the Open eCry market commentary for the week of September 9th. I'd also like to issue a reminder for September 10th at 8 p.m. Eastern. We have part 2 of the Open eCry Advanced Strategy course. So if you haven't tapped into that yet, hit the website and get registered for that. We'll show you 2 trade strategies that we're using to trade the markets. We just gave you a little taste of that on the commentary today, as we do normally every week. And then also you'll have on September 11th, you'll have the midweek market commentary coming up on some other various hot markets where some of the action is. So thanks again for listening, and we look forward to speaking to you next week on the Market Update.